Hi Robuxio traders, welcome to our new market update. In this one, we will go over the current market situation, what happened in the markets and how the portfolios reacted. And then we will go over new V3 portfolios that we were already talking about in the last market updates. And I will show you a little bit more. And we will also tell you about the day when these strategies and these updated portfolios will be released. Okay, so firstly, to the market downturn that happened in last few days. This video is recorded with the data that are ending on the 5th of August. So you can see that since the V2 portfolio update, the whole crypto market went down up to 40% or even more. And in last few days, the market went down another 10 to 20% based on the index you are using. What's perfect is that our portfolios were protecting these positions and they were making money in these downturns even, and that's perfect because that's how well-diversified portfolio is working. Of course, we cannot make money in every environment, especially not if we are having a lot of trend following strategies in the portfolio, but protect ourselves against these huge downturns is super important because then the compounding effect is much bigger over the long term. So big success in last few weeks. Also, just for you who don't look at crypto markets that much, you can see that on the 5th of August, the market fell by 12 to up to 20, 25, even 30% on some smaller coins. Ethereum, for example, fell by more than 20% and ended in 20% loss. Bitcoin minus 6 or 7%, and the whole total crypto 3 market on minus 5%, while our portfolios went up to 10 to 6% based on which portfolio you are trading. And we ended up in a few percent gain, which is just perfect. And this is exactly how it is working if you are trading long and short approach together in one diversified portfolio. Here you can see when the trend strategies can make money basically, and this is usually in environment when the trend is there, basically when Bitcoin or the whole crypto market is growing. And by growing, we mean here that it's getting above 50 days high or below 50 days low. And of course, it should be in this area when the market is growing a little bit longer, because then we can produce profits. Of course, it was in the end of 23 and start of 24. Of course, it was in 22. It was in 21. But on the other side, it was also in 22 when the market was falling a lot here or even here. So these are the best times for longer term trend following strategies and when these are making money. On the other side, you can see that in current market, what the market is doing, that it's going up just to go down and to go up and to go down, up and down again. And that's the reason why our current portfolio was flat or was getting into small drawdown, because our long strategies were trying to get into positions here just to get out and get into some small loss. The same thing with our short trend strategies. These were trying to get into the market here just to get into some losing positions and exited the positions again. Yeah, so that's the market which is not the best for trend following, but fortunately we do trade mean reversion strategies too. But if you look at trend following long only strategies, you can see how it is corresponding with when the market or Bitcoin in this example is making new 50-day highs. Just look at this chart. It's making the highs here, and the strategy is making a lot of money here. The difference is that well-built strategy can protect most of the profits during these downturns because, for example, check 21 and 22, the strategy or those strategies were making nice money. Then there was 22 when it was protecting the profits. But what happened on Bitcoin, for example, most of the profits that were made here were lost in 2022. So that's the reason why we trade and we don't invest. Of course, if you add short trend strategies there too, you are making more profits more often. Why? Because our trend short strategies can make profits, for example, in 22 when the market was falling, but our long trend strategies weren't making money. On the other side, they were losing a bit. That's just the nature of diversified portfolio, and especially if you put mean reversion strategies to it, it's even better. So just a quick sum up. Here you can see the current performance of our V2 high risk portfolio. You can also see that mean reversion strategies are super stable, but they have one risk, and it is in markets that are nothing but falling or nothing but growing very quickly without any corrections. In these markets, mean reversion strategies are usually losing, but again, it's okay because in these markets, some of our trend strategies or momentum strategies are making money. You can see it here. Mean reversion is losing, but trend strategies are making. Together, we made some money on this downturn. So this is again how everything is working together, how the synergies of the portfolio are working in general. Now, we were trying to solve one problem or one characteristics regarding to longer term trend following strategies. Those are the ones that are sticking with positions for many days, a few weeks, sometimes even a few months if the market is growing really strongly. And we were trying to find through thorough research some strategies that are delivering profits just from shorter term breakouts, let's say from 1 to 2 to 3 days breakouts, and not sticking with positions for many days or many weeks. Because if you want a strategy to stick with a position for many days, it also means that you have to give it a lot of space. So you cannot exit the position on any just short dip, and that's why these strategies are that volatile. So we were building the whole new sub portfolio of shorter term breakout strategies that are extracting profits based on 1 to 2 or 3 days movements, and they are stabilizing the trend following part or momentum part of the portfolio further. You can see it here. Of course, in environment like it was in last 4 5 months, these strategies on average wouldn't make new all-time highs on the equity. But these are more stable, and let's say that the trend, and we can say that the whole momentum portfolio is more stable and is getting out of positions a little bit quicker. And if you compare it to our V2 trend or momentum part of the portfolio, you can see the difference here. The main difference is that it is protecting the profits a little bit better compared to our V2 portfolio. Why? Again, because there are shorter term momentum strategies that are only extracting profits from these initial movements from 1 to 2 to 3 day momentum. So this is the difference. These are just losing a little bit less. It doesn't mean that they are able to make money in environment that is non-trending basically. And the difference is compounding, of course. The compounding effect is working to the upside, but it's also working to the downside. And now you can see the trend and mean reversion part of the new V3 portfolio. Again, mean reversion extremely stable, but it doesn't mean that it doesn't have any downturns. Of course, it has, and that is the reason why we definitely don't want to trade mean reversion strategies only, because they do include different type of risks that are not included in momentum strategies. But on the last downturn, you could see how these two sub portfolios are working against each other. Mean reversion was losing a bit, momentum or trend following part of the portfolio was making money. So together, the new V3 portfolio is already trading 20 strategies together. Each strategy can trade up to 20 open positions, and the diversification is pushed even further. It's the best portfolio we have built so far, and we were really working on it for more than half year. So this portfolio will be implemented in this Thursday, which means that from Thursday to Friday, you will start trading this updated V3 portfolios. You can see the comparison to V2 or V1 portfolio here. You can also see the V1 portfolio that you originally started trading. Again, it was losing a little bit more in this range bound market compared to the V2. Why? Again, the main reason is that our V1 portfolio included a little bit more trend strategies and less mean reversion strategies. And that was the main update from V1 to V2. The biggest update from V2 to V3 is that we added new, quicker momentum strategies, and those are pushing the compounding effect a little bit further. Plus, we added two new breakout short strategies that are delivering profits in these downturns that happened, for example, in 2022. You can see the difference here. And of course, over the long term, over many years, the compounding effect is making a huge difference. That's why the difference here is so big. That's basically the compounding effect and the ability to protect the accounts against big drawdowns. Of course, it doesn't mean that there won't be any drawdowns. The drawdowns will be still there. It will be still a drawdown of 3-4 months without any problems. So please don't expect that the portfolio will nothing but grow. But that's definitely very important update that we are doing right now. Here you can see high, medium, and low V3 portfolio. The main difference, again, of course, is volatility. The volatility is extremely visible in drawdowns, and drawdowns are visible here. So you can see that the low risk portfolio has a drawdown of about 50 to 60% of a drawdown of the high risk portfolio, and the medium risk is somewhere in between. You can expect the maximum drawdown of the high risk portfolio between 20 to 30%, maximum drawdown of low risk portfolio between 10 to 15%, and maximum drawdown of medium risk portfolio between 15 to 25%. Okay, that's all to our today's market update. In the next one, we will talk a little bit more about every individual strategy that we added to the portfolio. And if you have any other question to V3 portfolio or to our trading, please feel free to ask. Thank you and happy trading. Bye.